Hello everyone, welcome to Bitcoin Not Crypto. You can find me on Twitter X at ForestTotal. In today's video, I'm going to be talking about the recent Bitcoin crash, the price all the way from the high 90s to the low 80s. And we've been seeing maybe a little bit of stabilization here, some stabilization with Bitcoin treasury companies. I'm going to be talking about what my thoughts are. Is the bull market over? Is this a normal correction? What are we seeing here? And I'll be talking, of course, from my own opinion, my own knowledge on this industry, my own experience, and none of it is going to be financial advice. I hope to just bring some information that maybe you haven't seen, haven't heard, haven't thought of, and you can include that in your other knowledge that you have around Bitcoin, around your own personal strategy, and hopefully that helps. And of course, none of this should be trading advice, investing advice, none of that. It is all just my opinion. So all of that out of the way, I want to talk about why this happened. It's not necessarily any one thing. The market is complex. It is made up out of a lot of things. So to start, there was a lot of leverage in the system, as there always is within Bitcoin, until there's a nice move up that liquidates the leverage, or a move down to liquidate the other side of that leverage. So that's happened. However, this has gone beyond that. So the whales that shake out leveraged holders, they've done that, and then beyond there's been a fire sale. So there's other reasons why that happened, and I'm going to bring up this tweet here by James Van Straten, who talks about the fire sale side of this Bitcoin price action. So he's saying, who is currently selling? Short-term holders who bought the top are selling spot Bitcoin. So this isn't just whales manipulating the price to shake out leverage. This isn't leverage-driven. Perps aren't negative. That's why equities such as MSTR are green. They have bottomed out or close to it. Just your old-fashioned fire sale in BTC. This shows basically the amount of selling based on the amount of hold time. So you can see as soon as you go past 1 month, 3 month, it starts to really taper off pretty drastically all the way to the 1 and 2 years. There's zero sales here for this specific day. And you can see here a lot of this selling is happening at the 24-hour, the 1 day, 1 week. So that means these are very short-term holders. And this is exactly as he stated, in my opinion, which is people that bought at the top that are saying, okay, well, I thought this was going to go up. It's going down. I've got to, I either have a stop loss that's automatically triggered, or I'm just going to sell and take my losses. This thing isn't, the one-way ticket all the way up. The rocket ship isn't going to the moon. I'm getting out here. Maybe they'll get back in, maybe they won't, but these are not long-term holders that are selling. These are short-term traders, speculators, and people with lettuce hands is the idea, right? Hands that can't hold much. Stack friends who stack sats. Look, it can be lonely being a Bitcoiner. There's a lot of people out there that haven't figured out sound money yet, haven't figured out how amazing Bitcoin is, but that's where the Orange Pill app comes in. I've been using the Orange Pill app now for a little while, and it's the Bitcoin social layer. It's the way to connect directly with Bitcoiners. None of this Web3 nonsense. Bitcoiners. I've been using the Orange Pill app for a little while now, and I live in a small town, and I've already connected with more than half a dozen Bitcoiners that I would have ever have met any other way, right? You can get lost on these other social medias and really just not find anybody locally. The way the app works is it can find Bitcoiners near you, and that works well, if you're trying to find some people around your town, some people locally, but it also works really well if you go to a Bitcoin event or a conference. And as you're there, if you're there ahead of time, you can start reaching out and connecting with Bitcoiners as they all come and converge on one area. And a lot of them are going to be using the Orange Pill app, and you can connect with them ahead of time. You can, chat and get to know people. And it's just a great way to get to know actual Bitcoiners. I found it to be incredibly useful personally. They also have merchants on the app and events, and I'm even hosting my own Bitcoin meetup that I've posted on Orange Pill app. It's the Bitcoin social layer that we all needed. Bitcoin is a network and it grows as we all adopt it. And this is one part of Bitcoin's story. So if you wanted to use it, check out orangepillapp.com. I'll also put a link in the description to my profile. If you wanted to connect with me personally, you can do so through that link. Thanks Orange Pill App for sponsoring this video. And now back to it. So here is more evidence that this isn't leverage driven, right? Of course, the initial price action could have been, but it's gone beyond that leveraged shakeout. So you can see actually by this chart here for the Binance BTC to USDT trading pair, there's a lot of leverage up here in the 89, maybe 90,000 range. This doesn't go above, up to the hundreds, but there's probably leverage up there as well, which means that the price action will want to reach those levels to shake those people out as well at some point, in my opinion, right? That's why my opinion isn't that this is the beginning of a bear market. This is a pretty standard price action for a Bitcoin bull market, which is crazy, and which is why it shakes out a lot of these spot holders as well, is because they don't understand that. They're used to, equities that trade 3% down or 2% down, and it's unbelievable that that's happened, right, in a day, right? Instead, you could see Bitcoin drop 10, 20, 30% in a day potentially, which is wild, but it is possible and it happens in the past. So we can see here, there's actually no leverage that it's going down to. There's this tiny little amount of leverage here at 80,000. And actually, there's just really not a lot at all. I mean, even with that, right? So this leverage has all been shaken out, and it's spot selling that is causing the price to go down at that time. Here is a really interesting chart. This was posted in 2017, and this shows different things that caused a crash, right? So most of us don't even know what the Hearn dump is at this point because it happened so long ago. The Bitfinex hack we might know about because there was a movie made. The Bank of China regulations, there's these crashes. These are huge percentage moves actually. ETF denied, boom, big crash. Bitcoin Cash drama. So there's, the hard fork. So again, a big crash and then a big reversal because people were able to sell their Bitcoin Cash and buy more Bitcoin likely. Yeah, so this is 2017, right? And we're seeing similar type activities. And you can see here, these kind of times, maybe a slow recovery, a little bit of a sideways action, and then yet it recovers and goes past the all-time highs, which people were dumping at. So in my opinion, this is just going to happen again and again and again. So here's a interesting thing here from my boy Rajat. He says, this is crazy. The Bitcoin Fear and Greed Index is lower than where it was when FTX collapsed. If you buy Bitcoin without studying it, you're going to sell out of fear and you're going to lose money. That's a lot of what's happening here. So this here is the Fear and Greed Index that is connected to Bitcoin specifically, and it is at 10. And you can see what we have here is a chart of the Fear and Greed Index. And at the low of 2022, it was at 22, and now it's at 10. So there's a huge amount of fear, right? We have to understand that price is always decided at the margin. It's always decided by buyers and sellers at the time, right? If you're a holder, you're not participating in the price going up or the price going down. You're participating in the lack of liquidity within that market that is driving price. So you do have an effect in that way because you've taken liquidity off of the market potentially. However, the price action, right, is based on buyers and sellers at the time and in the price ranges. So that's why we've seen the extreme fear, 10 on this scale here, and we've seen a lot of selling, right? Right? That's what happens. That's what causes the price to go down, is more sellers than buyers. So here we have that exact same chart, but a little bit more additional information from Terrence Michael here, Proof of Money on Twitter X. We have the fear and index at 10, and we have a chart here discussing the fear and greed index and where we're at on different types of crashes and all of that. So let's read what he has to say. Historically, when the emotional challenge tourists, right, this is lettuce hands, the people that are selling right now, who don't understand Bitcoin, have driven this index down into the fear zone, which is below 25, we followed up with a massive surge in price. And now we sit at 10, an even lower score than when scam bankster frauds FTX collapsed. December 2018 score of 8. Within 2 months, we surged 330%. So that's 32,000 to 13,800. March 2020 score of 9. So very close to that, right? And this is the COVID. This is kind of COVID era, March 2020, which we had a massive crash, which was a total fire sale on all sorts of assets, including what is extremely liquid and available, which is Bitcoin and crypto at large. Within 1 month, we surged 75% from 4,000 to 7,000. May 2021 score of 10. Within 2 months, we surged 33%. November 2022 score of 20. Within 2 months, we surged 44%. And so on and so forth. And I'll link this below if you guys want to check that out. But this is showing that after this, the fear and greed index seems to be a chart that correlates very well. So, this what is essentially happening is when the fear gets this low, or the index of the fear and greed gets this low, that's shaking out a lot of people that have no idea what this asset is worth. It's bringing the price down to incentivize new buyers, and it creates a buying frenzy at that price, which we haven't quite seen yet, right? It's going to take a little bit of time before that fully happens, and who knows how much time, how less time, right? All of this is, all going to be speculation, and, only with hindsight we'll know how long it takes for this recovery. But what we can see looking at historical data with this index is that afterwards we see a massive price appreciation as well. So in my opinion, this is laying kind of the groundwork, right? This is taking us down to a level where we can rebuild and actually go higher than we were at before. So this is a nice chart just showing Bitcoin's adoption path, right? This is a big S curve here, 3% adoption Bitcoin in 2025, 3% adoption of the world is what it's saying. Online banking in 1996 it's equivalent to, and social media in 2005, and internet in 1990. So we have a long way to go with the adoption curve, and Bitcoin is inevitable. Bitcoin is harder money, sounder money, and individuals, nations, companies, everything, we all benefit from adopting the hardest money that we can. If you look back at history, the people, the nations that adopted a less sound money were exploited by nations and people that adopted a harder money, right? This is all in this book right here, of course, by Saifedean Ammous, The Bitcoin Standard. Talks about it a lot, and there's a lot of historical examples that show that. Now we'll just get I just got 2 more Twitter posts here. I wanted to be thorough, and 2 more Twitter posts before I actually talk about some more of my opinions here. So we got Bitcoin Isaiah here. M2 money supply growth per cycle. 2013 we had plus 26%. 2017 cycle 22%. 2021 cycle 49%. In the 2025 cycle, we've only had an increase in the money supply, the global M2 money supply, by 0.5%. Now, what we've seen and what Sam Callahan and Lynn Alden showed through their research was that Bitcoin tracks very well with global M2 money supply chart, right? And these are hard things to calculate. These are the information takes time to come in, so it's hard to use it as maybe a trading tool, but we can see where the cycle is going. And we can see here that we have had a lack of liquidity for this bull market, right? So we are in a bull market. Bitcoin has performed incredibly well despite high interest rates, despite the lack of liquidity in the market, right? The lack of money printing, right? We've actually seen some decreases of M2. We've seen, quantitative tightening. We've seen higher interest rates for longer, which makes it harder to borrow money, which when you borrow money, that money's getting created. So what we have seen here is we've seen Bitcoin stair step and grind upwards in price action despite an unfavorable metric that it tracks very well with. So has it decoupled? Has it proven maybe that the correlation isn't as connected as maybe we've seen in the past? Have we seen maybe Bitcoin is starting to change its behavior in the market? Maybe the people that are buying Bitcoin are starting to value it as a risk-off asset more than the risk-on asset that made it move with M2, as something like risk-on assets do, like Russell and Nasdaq and things like that. They will also move with M2 money supply. As more money is available, more people are able to invest that money, and it goes into risk-on assets. So that's typically what we've seen. What we can see here is Bitcoin has performed very well despite the lack of liquidity going into the market. So in this, what we can see, right? We can see around the world, we can see central banks lowering interest rates. We can see lending programs open up. We can see that the debt of all these nations is untenable. There will have to be buying by the central bank, which is additional money creation. We can see reverse repos increasing, which is overnight holding from the central bank. We can see all sorts of money creation happening. The big one, of course, is the US and lowering long-term rates on their bonds, which is something that the current administration really wants. They want it for their own reasons. They want it because they have a huge amount of debt burden as a government. And if they are able to lower those rates and refinance when that debt comes to term, they have to refinance. And if those rates are really high, that means that their debt becomes more of a burden. So they want those rates low. So when they refinance their debt, the debt payments are less, and that adds to the deficit less, right? So we have a deficit every single year, right? It's around 2 trillion at this point. Doge is talking about eliminating 1 trillion of that deficit, right? They're not even talking about decreasing the amount of debt. They're talking about decreasing the amount of debt that they add to their debt pile. So another way that they could do that is by having lower rates. Now, they're not directly in control of that, although they have lots of influence, and they are definitely going to do whatever they can to try to lower those long-term rates, which will add liquidity into the market, and that a lot of that liquidity will get sucked into Bitcoin. So in my opinion, the bull market is still good. We haven't, Bitcoin hasn't, nothing's changed about Bitcoin, right? Nothing's changed about the thesis here that we can run higher before maybe we continue with the 4-year cycles of a bear market, right? We're still in a bull market year for the cycles. And I think we will have another drawdown for the cycles will continue to some degree, although it might be muted. And the reason for that, of course, is it's all built on sentiment, right? It's buyers and sellers. And if a lot of people believe that the cycles will continue, that becomes a self-fulfilling prophecy. So we will see that. This is not, in my opinion, the end of the cycle yet. We will continue to see, again, my opinion, do not trade this. My opinion, we will see Bitcoin hit another all-time high before we go into the traditional 4-year cycle. One more chart here, and I want to touch on a Bitcoin treasury company. Of course, the biggest one is MSTR. This is a post by Mason, who's one of the top boys at True North. It says, since early 2023, MSTR has endured 5 major drawdowns, each followed by new all-time highs. This week's sell-off is the steepest yet. Historically, buying after correlations of this size has been a great bet. NFA, not financial advice. Volatility is vitality. I remain bullish. If we look at this chart here, you can see from July to mid-September, or September, October even, 35% down. In March, they had a 40% drawdown that was very steep. And a lot, you can see these lines are a lot shorter, right? So the pain is really dependent on price action of when people have bought, right? So, there was a lot of buys here in November when, it was really this kind of blow off top moment here, but we can see this drawdown. I mean, you could argue the drawdown is more painful when it's quick or when it's slow, because there's a lot of hopium, there's a lot of people holding on, and they're holding on for a really long time, and that pain is kind of maybe a little slower, but like drawn out more, so it's more painful. Anyway, from peak to trough, we don't have a trough yet because we don't have the V-shaped recovery, but from high to low, we have a 55% drawdown for this recent price action of MSTR. So it's incredibly painful for people that have bought at the wrong time, for people that bought into a lot of hype and all of this. And but what has changed with strategy? Well, let me tell you what has changed. They've lowered the amount of debt to net asset value. They've increased the amount of Bitcoin. They've increased the amount of Bitcoin per share, fully diluted, and they're continuing to operate. They're continuing to create more financial products that wrap up their equity, wrap up Bitcoin, and continue to sell that to new people within captive markets like the convertible bond market, like the preferred share market. And they're continuing to operate at a level where they can acquire massive amounts of Bitcoin. And again, they're in their accumulation phase as a company. And I believe that this is no different, right? This is no different. The recent price action of MSTR is really no different from the past actions of MSTR. And what Mason ended there with is volatility is vitality, and volatility goes both ways. We cannot expect volatility to only be up to the upside, right? There's a lot of traders in this, and it is acting like a leveraged version as far as its price goes of Bitcoin. It is decoupling occasionally because it is not, just a leveraged play of Bitcoin. It has many other attributes, and it is, it's going to be volatile to the upside and to the downside. And you should allocate yourself depending on how much volatility you can handle, your age, your portfolio size, right? Volatility is a part of a risk factor, and when you evaluate risk, the best way to, deal with risk is position size. So are you fully ported to MSTX, MSTU, or even MSTR or MSTR options or something like that? Well, then you're going to, hopefully you're okay with extreme volatility, right? To the upside and to the downside. And, for most people, that's obviously not the right portfolio. Not everybody can be as bullish as Gladiator, right? So to end this video, I'm remaining bullish on Bitcoin. I am remaining fully ported to Bitcoin in self-storage, self-custody. I have a position in strategy. I have a couple positions in different Bitcoin treasury companies. And I believe that what we've seen here is in equities, we've seen them hit green after this sell-off sooner than Bitcoin, which is an interesting situation. And I think that Bitcoin has become oversold at this point. The fear and greed does not deserve to be at 10, and we will see a recovery after this. And that is my opinion, of course. That's how I'm going to position myself. That's how I am positioned. I am down on my public portfolio that I share because it is only 2.5, 3 weeks old, maybe at this point. And so, timing is very difficult. You cannot time the exact bottom, right? It would have been way better to have built that portfolio at this point, in my opinion, because we have higher upside, right? We've seen the downside. Now we'll see the upside, right? And this is how the market moves. And I don't see that we are in a position yet for a actual bear market, right? A lot of this was initial sell-off was, if you look at headlines and things like this, was because of, tariffs, which we've already seen some information about. It was uncertainty whether Nvidia was going to beat on earnings. It was just a whole bunch of these small little aspects that spooked people out of these trades and began a and then it created this sell-off event, right? This fire sale. And you can kind of connect all these things, but you can really just look at the fact that Bitcoin, this happens all the time in bull markets, and we should expect no less. Why would we expect Bitcoin to not have these corrections, right? Maybe because in the recent history, we've seen the dips being bought, right? I've even said that. Every time we break below 95, we saw the bid come in, we saw the buys happen and drive the price up to 100 or beyond even. So we've seen that happen. And we just didn't see the bid come in this time because the selling pressure was too much. And I know that, I've allowed myself to be part of that bid, part of that buy that will help create more, price action to the upside here because in my opinion, this is a buying opportunity. Of course, again, not financial advice. I never want anybody to copy trade me because you are not me and you don't know exactly the moves that I'm making because I don't record them right away when I do them. Copy trading is a bad idea for anybody. You should not follow any other traders, in my opinion. You should build your own knowledge on this and build a strategy that works for you for the long term. Everyone needs a strategy, and mine includes the company strategy, but it mostly includes Bitcoin in cold storage.